It's now down to decision day for South Africa's central bank. Inflation surged to 13-year high in June. Data showed on Wednesday, moving further away from the central bank's target the day before interest rate announcement. Headline inflation, consumer inflation clocking more than forecast to 7.4% year-on-year in June, against analyst predictions for a 7.2% and a reading of 6.5% in the month of May. The latest inflation print in South Africa means the Reserve Bank's Monetary Policy Committee could see another rate hike. The bank has already raised the benchmark by a cumulative 125 basis points since November last year and signaled higher borrowing costs ahead. The median expectation of economists in the Bloomberg survey is that a five-member Monetary Policy Committee will vote 3 in favor of a second consecutive half-point hike and a 2 for a 75 basis point increase. So we're down now as we speak till later this afternoon, about 3 p.m. in South Africa, for whether a 75 basis point rate hike or 50 basis points hike by the South Africa's Reserve Bank, led by the governor, Leseja Kayongo. We're expecting that announcement to come after 2 o'clock. It's likely to be a split vote. According to moneyweb.co.za, there was a split vote between by the bank's 5-member Monetary Policy Committee. Several economists had predicted a 50 basis point hike in South Africa's repo rate for the July MPC meeting, but that was before the higher than expected June inflation figure, which was published by the Statistics Office on Wednesday. The consumer price index of 7.4% came off the back of a spiral in fuel and food prices globally since the start of the year, which of course been exacerbated by the Russia-Ukraine war. So right now, inflation is a major consideration today for South Africa's central bank, as other central banks around the world. Inflation is now hitting multi-decade levels in key international markets. Countries such as the US have been forced to raise rates by 75 basis points. That's the last FOMC meeting. And commenting on what is expected ahead of June CPI reading and the MPC meeting, the senior economist at BNP Paribas in South Africa, Jeff Schwartz, says the South Africa Reserve Bank will raise repo rate by 75 basis points to 5.5%. And he went on to say, don't expect the decision to be unanimous by South Africa's Reserve Bank MPC today. And he thinks a split of 3-2 in favor of a faster front-loading is most likely. The SARB, South Africa's Reserve Bank's estimate for inflation for 2022 was at 5.9% and for 5% for next year, 2023, and that will now have to be revised higher at the end at today's briefing, which we're expecting Governor Kayongo to make with the press a bit later in the afternoon. We've gathered for you here on Arise News. It's going to be driven by food inflation, food and fuel inflation, one of the biggest odds for central banks now around the world. The SARB's implied the currency is the next consideration here. According to analysts, the rand had depreciated around 4.5% in trade-weighted terms and 7.8% against the US dollar since the last monetary policy meeting by the South Africa's Reserve Bank in the month of May. The bank's implied starting point for dollar-rand relationship in its KPM was 15 rand 88 to the dollar, and likely will be adjusted higher this week. This morning, we're looking at the dollar rand at about 17 rand 19 will fetch you $1 US this morning. That is beginning, the decision of the SARB is beginning to pile into the currency. That, of course, will have its impact on the equities market, on the GSE as well. So we're expecting the markets in South Africa on the currency side, on equity for risky assets, to be impacted by today's decision by Leseja Kayongo's led Monetary Policy Committee, 5 members who are expected to decide after 2 p.m. there. Keep that in mind. We'll cover that for you here on Arise Global Business Report later today at 3 p.m. Nigerian time. Coming up here on the show, details on quite a bit of other big stories making the story around the world. But let's quickly have what are called a preview with Clive Remathibela, our business analyst, joining us from Durban in South Africa very quickly. Clive, it's good to see you. I was just about to take this straight out of your mouth. Give me your expectation from the Reserve Bank of South Africa today, 2 p.m., 3 p.m. local time down there in Pretoria.
Thanks very much. I'm in Durban because we're at this Cannabis Expo, by the way. So if you see anything that looks green, don't mind. It's just the cannabis.
I like it.
We're under a lot of pressure in South Africa at the moment. We've got high food prices. We've got a high petrol prices. The oil price is not helping either. The economy in the first quarter actually did very, very well. We managed to record like 1.9% of growth, which is GDP. But what the concerns are from the Reserve Bank perspective is that if they don't do anything, if they don't act by increasing the interest rates, then we're going to have a catastrophe of inflation, and that might mean that we're going to have inflation out of control for the first time in the democratic South Africa. So the target of the Reserve Bank of South Africa is to keep inflation between 3 and 6%. Last month, listen to this, last month, they recorded 7.4% of CPI. That is the highest we've seen since I was born back in 1984. Can you believe that? And therefore, that has risen a lot of concerns about what it is that needs to happen. We know food prices are going up around the world. We know Africa in specific is under pressure. We know that there are things that can be done to redirect the course of the economy, but they cannot be done now simply because the global world, the global markets are just not in favor. And so we are expecting at least the Reserve Bank to increase the repo rate and the interest rate by some margin this afternoon.
Yeah, I'm gonna try and piggyback. I was born a little bit earlier than you in 1980, so I'm gonna try and calculate South Africa's inflation around when I was born. So we're gonna compare notes off camera later, not to disturb what you're doing down there. But again, how does it all pale into currency? The value of the rand in your pocket right now, where you are in Durban. How do you think how is inflation biting the money in your pocket?
It's no surprise, brother, because, you look at what the price of the rand is currently, it's going to cost you close to about 17 rand to the US dollar. We last saw that just during the civil riots here in South Africa back in 1993, before the dispensation of our democracy. So we are concerned, and obviously because there are other technical factors. For example, our commodities, the gold, the platinum, the diamonds, all our commodities are dollar paired. So that means that you have a very strange situation. The Johannesburg Securities Exchange, the JSE, is doing well, but the real economy where people are being affected is not doing well. And that just shows you the hypocrisy of capital markets, because you've got a system where, unfortunately, those who are impaired by the dollar are affecting the poor. And these are the concerns. Maybe as Africa, we need to start talking about the pricing of our commodities, the pricing of our goods and services in dollar terms, and how that impacts our local economy. So to buy right now the dollar, it's going to be costly for a South African, because most of our stuff, by the way, as you know, we are importing it into the country. And so that affects how we spend our money on a day-to-day basis.
You're doing well, Clive, in Durban. I can see that here. Thank you so much. You're doing well. Thank you so much. Enjoy yourself in Durban and keep us in the loop.